Welcome back to the Daily Earnings Reports podcast. Make sure to like and subscribe wherever you are listening to this podcast from. Today, we're diving deep into United Airlines Q4 and full year 2024 earnings. They released their reports on January 21st, 2025, and we've got a lot to unpack. We're looking at the press release, the investor update, and even a Form 8K filing about a recent board member change. Buckle up, it's going to be a fascinating ride.
Indeed, there's a lot to cover, and it's particularly interesting because United is coming off a record-breaking year. Not only did they report a record Q4 profit that flew past analysts' expectations, but they also carried the most passengers in the company's history.
Record-breaking is right. It makes you wonder, is this just a temporary boost from the post-COVID travel rebound, or are there deeper, more sustainable factors at play here?
That's the million-dollar question, isn't it? While the travel rebound definitely contributed, United Next plan seems to be playing a significant role in their success. What's catching my eye is the increase in customer satisfaction and a growing preference for the United brand. These aren't just fleeting trends, they suggest that their strategic initiatives are hitting the mark and resonating with travelers.
Okay, color me intrigued. Let's break down this United Next plan. What are the core elements of this strategy, and how are they driving these impressive results?
United Next is a multifaceted strategy that focuses on several key areas. They're modernizing their fleet with more fuel-efficient aircraft, expanding their network to reach more destinations and fleet, really doubling down on improving the customer experience. By investing in these areas, they're not just meeting the current demands of travelers, they're anticipating future trends and positioning themselves for long-term success.
It sounds like they're playing the long game here. But let's get down to brass tacks and talk numbers. What's the financial story behind this record-breaking performance?
Looking at the raw figures, United's revenue for Q4 2024 was $14.7 billion, which represents a 7.8% increase year over year. Their pre-tax earnings were $1.3 billion with a pre-tax margin of 8.9%. If we look at the adjusted figures, those pre-tax earnings bump up to $1.4 billion, and the pre-tax margin jumps to 9.7%.
Those are some healthy margins. What about earnings per share? That's usually a key indicator that investors watch closely.
Absolutely. Diluted EPS came in at $2.95, and on an adjusted basis, it was $3.26. They also bought back about $81 million worth of shares during the quarter, which leaves over $1.4 billion remaining in their buyback authorization.
It sounds like they're in a pretty strong financial position. But for someone who's not a financial expert, what are the most important takeaways from these numbers? What's the story they tell about United's financial health?
There are a few key things that jump out. First, the revenue growth is very strong, and it's being fueled by both increased capacity and higher passenger revenue. This tells me that people are choosing to fly United, and they're willing to pay for it. Second, they're managing their costs effectively. Even with the rising fuel prices we've seen, their CSMX, which is a measure of their costs, excluding fuel and other volatile expenses, actually decreased year over year. That's a sign of operational efficiency. Finally, their strong liquidity position with $17.4 billion available at year-end gives them a lot of financial flexibility to continue investing in their growth and weathering any potential storms on the horizon.
Who financially, they're looking pretty solid. But what really piqued my interest was their prediction of robust demand in the first quarter of 2025. They even expect domestic RASM, which is a measure of revenue per available seat mile, to turn positive year over year. What's driving this optimism? And are there any potential headwinds that could throw them off course?
Their optimism is rooted in a few key factors. The continued recovery in travel demand, especially in the domestic market, is a big one. People are eager to get out and travel again, and that's translating into strong bookings for airlines. United's expanded network and their focus on attractive leisure destinations, like ski resorts and sunny getaways, are likely contributing to this positive outlook as well. They're tapping into that pent-up demand for leisure travel and positioning themselves to capture a bigger slice of that market.
So far, so good. But no business is immune to challenges. What are some potential headwinds that could rain on their parade?
You're absolutely right. There are always potential challenges to consider. The global economic outlook remains uncertain, and if we see a slowdown or a recession, that could impact travel demand. Fuel prices are another wild card. They can be volatile and unpredictable, which can squeeze airline profits. And we can't forget about potential geopolitical risks that could disrupt travel patterns. These are all factors that United will need to keep a close eye on and be prepared to adapt to. However, United's strong financial position and their strategic focus on efficiency and cost management should give them some breathing room to navigate these challenges effectively. They've got a good foundation to build on.
It's like they're battening down the hatches, but still charting a course for growth.
Oh.
Speaking of growth, let's shift gears and talk about United's focus on customer experience. They're reporting a Net Promoter Score increase. Their app is wildly popular, and they're rolling out new features like in-app Spanish translations and automated solutions. It seems like they're really trying to up their game in this area. How do these initiatives fit into the broader trend we're seeing in the airline industry towards improving customer service? Is it just a fad, or is this a real shift?
It's definitely not a fad. The airline industry is undergoing a major transformation when it comes to customer experience. For years, airlines had a reputation for, well, let's just say less than stellar customer service. But now there's a real shift towards providing a more positive and seamless travel experience. This is being driven by several factors, including increased competition, the rise of social media where bad experiences can go viral in an instant, and the growing expectation of personalized service that we're seeing across all industries.
So it's not just about getting you from point A to point B anymore. It's about the entire journey and making it as enjoyable as possible.
Exactly. Airlines are realizing that providing a positive customer experience is no longer a nice to have, it's a competitive necessity. By investing in technology, personalized services, and better communication, United is positioning itself as a customer-centric airline. And that's crucial for building brand loyalty and attracting new passengers in today's competitive market.
It sounds like they're trying to win hearts and minds, not just market share. Now let's talk about the nuts and bolts of their operations and network expansion. They're touting record completion days, improved on-time performance, a new cargo facility at Newark, and that groundbreaking agreement with SpaceX for Starlink Wi-Fi. All of these sound like positive developments, but how do they translate into tangible benefits for passengers and ultimately for United's bottom line?
These operational improvements are key to their success. Record completion days and improved on-time performance mean fewer delays and disruptions for passengers. That translates into a more reliable and enjoyable travel experience, which can lead to increased customer satisfaction and loyalty. Happy customers are repeat customers after all.
And what about the cargo facility and the Starlink agreement? Are those just side projects or do they have strategic value?
Not side projects at all. The new cargo facility at Newark expands United's capacity to handle cargo, which opens up new revenue streams and strengthens their position in the cargo market. It's a smart diversification move. And the Starlink agreement is a potential game changer for in-flight connectivity by offering fast, reliable Wi-Fi on more flights. United is enhancing the customer experience and differentiating itself from competitors. This could be a big draw for business travelers and anyone who values staying connected in the air.
It's like they're turning the plane into a flying office or entertainment hub. Now let's talk about their ambitious network expansion. They're undertaking the largest international expansion in their history, adding new routes and focusing on those ski and sun destinations we talked about earlier. What's the strategy behind this expansion? Is it just about adding more dots to the map, or is there a deeper game plan at play?
It's definitely more than just adding dots to the map. United's network expansion is a bold move to capture a larger share of the global travel market. By adding new international routes, particularly to underserved markets, they're providing travelers with more options and increasing their reach. And the focus on ski and sun destinations is a strategic one. They're catering to the growing demand for leisure travel and tapping into markets that tend to be less sensitive to economic fluctuations. People will always want to go on vacation, even if the economy hits a rough patch.
So they're diversifying their portfolio, so to speak, both geographically and in terms of the types of travelers they're targeting.
Precisely. By diversifying their network and expanding their reach, United is reducing their reliance on any single market and positioning themselves to compete more effectively with other global airlines. They're also catering to a wider range of travelers, from business travelers seeking international connections to leisure travelers looking for unique and exciting destinations. They're trying to be the airline that can meet everyone's needs.
It sounds like they're covering all their bases. Now let's move on to their efforts in employee and community engagement. They've been doing things like fantasy flights for children, making donations, volunteering, supporting the Special Olympics, and even launching new employee resource groups. These are all feel-good initiatives, but are they just good PR, or are they strategically important for attracting talent and building brand loyalty?
While these initiatives certainly generate positive PR, their strategic importance shouldn't be underestimated. In today's competitive job market, companies need to do more than just offer competitive salaries and benefits to attract and retain top talent.
So it's about more than just the bottom line. It's about creating a company culture that people want to be a part of.
Absolutely. Employees, especially younger generations, are increasingly seeking employers that align with their values and are committed to social responsibility. By demonstrating their commitment to their employees, the community, and social causes, United is enhancing their employer brand and making themselves a more attractive place to work. This can be a major advantage in a tight labor market.
It's like they're saying, we're not just a company, we're a community. Now let's talk about that Form 8K filing regarding the board member change. Captain Ann Worcester resigned, and Brian Noyes was appointed by LPA Mech to fill the vacancy. Can you break down what LPA Mech is and why they have the power to elect a director to United's board?
LPA Mech stands for the United Airlines Pilots Master Executive Council of the Airlines Pilots Association International. It's essentially the pilots' union at United Airlines. The fact that they have the power to elect a director to the board highlights the significant influence that the pilots' union holds within the company. This influence comes from the critical role that pilots play in airline operations and the potential impact that labor relations can have on an airline's performance.
So while this particular change seems routine, is there anything we should read into it? Could it signal any potential shifts in United's relationship with its pilots' union?
It's hard to say for sure whether this specific change signals anything broader. However, any change in board composition, especially one involving a director elected by a powerful stakeholder group like the pilots' union, is worth noting. It will be interesting to see how this new dynamic plays out.
What should we be paying attention to in the future?
Keep an eye on any future developments related to labor relations at United, such as contract negotiations or any potential disputes. The dynamic between the company and the pilots' union can have a significant impact on United's operations, costs, and overall performance. It's a key relationship to watch.
That's some insightful analysis. Before we wrap up this part of our deep dive, let's touch on United's guidance for the first quarter and full year of 2025. What are they projecting, and what should we make of these numbers?
For the first quarter of 2025, they're projecting adjusted diluted EPS to be in the range of $0.75 to $1.25. For the full year, they're anticipating adjusted diluted EPS to be between $11.50 and $13.50. They've also set adjusted total capital expenditures at less than $7 billion for 2025.
Those numbers sound pretty optimistic. They're clearly expecting continued growth and profitability.
That's the takeaway, yes. They're confident in their ability to execute their strategy and deliver strong results. Of course, guidance is just that, guidance. Actual results may vary depending on a variety of factors, as we've discussed.
That's a good point. It's important to keep in mind that the future is never certain, especially in a complex and dynamic industry like airlines.
Exactly. But based on what we're seeing now, United seems to be on a very positive trajectory. They've got a lot going for them, and it will be interesting to watch how they continue to evolve and grow in the years to come.
Before we move on, can you briefly explain profit sharing? It came up in the investor update, but I think it's worth clarifying what that means for United's employees.
Of course. Profit sharing at United is based on a formula tied to the company's financial performance. Essentially, employees receive a portion of the profits if certain financial targets are met. This ensures that employees share in the company's success and are incentivized to contribute to its profitability. It creates a win-win situation where everyone benefits when the company does well.
Okay, so it's a way to align the interests of the company and its employees. That makes sense. Finally, let's touch on their fleet plan. They mentioned it briefly in the investor update, but I think it's worth digging into a bit more.
Absolutely. United has laid out their fleet plan through the end of 2025, outlining the number and types of aircraft they expect to have in operation. They're planning to maintain their fleet of Boeing 777-2300 aircraft at 96 throughout the year, while their fleet of Boeing 787s is expected to grow from 77 at the beginning of the year to 84 by the end of the year. They're also planning to take delivery of additional Boeing 737AX200 aircraft while gradually reducing their fleet of Airbus A319, A320 aircraft. This fleet plan reflects United's focus on modernizing their fleet with more fuel-efficient aircraft and expanding their capacity to meet growing travel demand.
It sounds like they're strategically managing their fleet to balance efficiency, capacity, and I'm guessing sustainability goals as well.
That's exactly right. Fuel efficiency is a major consideration for airlines, both from a cost perspective and an environmental perspective. By investing in more fuel-efficient aircraft, United is reducing their operating costs and their environmental footprint. It's a win-win.
It seems like United is really firing on all cylinders. They're performing well financially, they've got a clear and ambitious strategy for growth, and they're making smart investments in their fleet, their network, and their customer experience. What's your overall assessment of their current position and their future prospects?
Based on the information we have, I'd say United is in a very strong position. They're benefiting from favorable industry trends, their strategic initiatives are yielding positive results, and they have a solid financial foundation to support their growth ambitions. They're definitely a company to watch in the coming years.
Okay, let's take a step back and consider the broader implications of United's performance for the airline industry as a whole. Is their success a sign of a healthy and thriving industry, or are there underlying challenges that we need to be aware of? What's the bigger picture here?
United's success is certainly a positive indicator for the airline industry. It suggests that the recovery from the pandemic is well underway and that there's strong demand for air travel both domestically and internationally. People are eager to travel again, and that's good news for airlines.
But it's not all smooth sailing, is it? The airline industry is notoriously competitive, and there are always challenges lurking on the horizon.
That's true. United is facing intense competition from other major airlines, both in the U.S. and globally. Each airline is vying for market share and customer loyalty, and they're all implementing their own strategies to attract passengers and differentiate themselves. It's a constant battle for dominance in the skies.
So it's a dog-eat-dog world out there. How does United's performance stack up against its rivals? Are they leading the pack or are they playing catch-up?
It's tough to say definitively who's leading the pack in such a dynamic industry. All of the major airlines are constantly innovating and adjusting their strategies to gain a competitive edge. This includes things like offering new routes, upgrading their fleets, improving in-flight amenities, and leveraging technology to enhance the customer experience. It's a constantly evolving game. But I'd say United is definitely among the leaders in terms of their strategic vision, their financial performance, and their commitment to customer experience.
It sounds like they're not just playing the game, they're trying to change the rules of the game. Now, I'm curious, what can we learn from United's approach that might be applicable to other businesses, even outside the airline industry? Are there any universal takeaways here?
Absolutely. There are several key takeaways from United's strategy that can be applied across industries. First and foremost, they've demonstrated the importance of customer centricity. United is laser-focused on providing a positive and seamless travel experience, and this is something that any business can prioritize, regardless of what they sell or what services they provide.
It's all about understanding your customers' needs and exceeding their expectations.
Exactly. Second, United has highlighted the need for operational excellence. Their focus on on-time performance, reliability, and efficiency is a crucial aspect of their success. This translates to any business that relies on delivering a product or service consistently and effectively.
So it's not just about having a great product or service, it's about delivering it flawlessly. What else?
Third, United demonstrates the power of innovation. They're constantly exploring new technologies and ways to improve the travel experience, and this commitment to innovation is essential for any business that wants to stay ahead of the curve and remain competitive.
So you can't just rest on your laurels. You have to keep pushing the boundaries and looking for ways to do things better.
Exactly. And finally, United underscores the value of social responsibility and sustainability. Their initiatives in these areas not only demonstrate their commitment to being a good corporate citizen, but also contribute to their brand image and appeal to a growing segment of consumers who prioritize these values.
So it's not just about profits anymore. It's about purpose and impact.
Precisely. Companies that embrace social responsibility and sustainability are not only doing good for the world, they're also doing good for their business.
It sounds like United is a case study in how to run a successful and sustainable business in the 21st century.
I think that's a fair assessment. They're definitely a company that other businesses can learn from.
Now let's dive back into the nitty-gritty of their financial reports for a moment. We talked about their overall performance, but I think it's worth highlighting some of the specific details that stood out to you. Expert speaker. We talked about their overall performance, but I think it's worth highlighting some of the specific details that stood out to you.
Of course. Looking at their balance sheet, we see that their total assets at the end of 2024 were $74.08 billion, compared to $71.0 billion at the end of 2023.
That's a pretty significant increase. What's driving that growth?
A lot of it is related to their investments in their fleet and their network expansion. They're acquiring new aircraft, expanding their operations, and building out their infrastructure. These are all capital-intensive activities that are reflected in their asset base.
What about their liabilities? Did those increase as well?
Yes, their total liabilities increased slightly, from $58.43 billion at the end of 2023 to $61.42 billion at the end of 2024.
So both their assets and liabilities grew. What does that tell us? Is that a good thing or a bad thing?
It's not necessarily good or bad in itself. It's important to look at the context. In this case, the increase in liabilities is largely due to their investments in growth. They're taking on more debt to finance aircraft purchases and other expansion activities. However, it's important to note that their stockholders' equity also increased significantly, from $9.32 billion at the end of 2023 to $12.68 billion at the end of 2024. This indicates that their overall financial position is strengthening even as they take on more debt.
So they're leveraging debt strategically to fuel their growth, but they're also generating strong earnings that are boosting their equity. It's a balancing act, but it seems like they're managing it well.
Exactly. They're using debt as a tool to accelerate their growth, but they're doing so in a responsible and sustainable way.
Let's move on to their cash flow statement. That's another key indicator of a company's financial health. What does their cash flow tell us about their performance?
Their net cash provided by operating activities was $9.45 billion for the full year 2024, compared to $6.91 billion in 2023. This is a very positive sign. It indicates that their core operations are generating strong cash flow, which is essential for funding their investments, repaying debt, and returning value to shareholders.
So they're making money and they're generating cash. That's a good combination. What about their investing activities? How much are they investing in their growth?
They used $2.65 billion in investing activities during 2024, primarily for capital expenditures such as aircraft purchases and facility upgrades. This is consistent with their fleet modernization and expansion plans.
So they're putting their money where their mouth is. They're not just talking about growth, they're investing in it.
Exactly. They're backing up their words with actions.
And how about their financing activities? Are they taking on more debt or are they paying down debt?
They used $4.18 billion in financing activities during 2024, mainly for debt repayments and other financing-related transactions. This suggests that they're managing their debt levels carefully and maintaining a healthy balance sheet.
Okay, so they're generating cash from their operations, investing in their growth, and managing their debt. That's a pretty solid financial picture overall.
I agree. Their strong cash flow and financial position provide a solid foundation for their future growth and their ability to navigate potential economic challenges.
It sounds like United is in a pretty enviable position right now. They're performing well financially. They've got a clear strategy for growth, and they're investing in the right areas. They seem to be ticking all the boxes.
They're definitely a company to watch in the coming years.
All right, let's take a broader perspective for a moment and consider the context of the airline industry as a whole. What are some of the major trends, challenges, and opportunities that are shaping the industry's future?
The airline industry is facing a number of significant trends, challenges, and opportunities in the coming years. On the one hand, there's the ongoing recovery from the pandemic, which is creating a surge in travel demand. This is a positive development for airlines, but it also presents challenges in terms of managing capacity, staffing, and meeting the evolving expectations of travelers.
So it's a good problem to have, but still a problem nonetheless.
Exactly. Then there are the rising fuel costs, which are putting pressure on airline profits. Airlines are looking for ways to mitigate these costs through fuel hedging strategies, fleet modernization with more fuel-efficient aircraft, and even exploring alternative fuels like sustainable aviation fuel, SAF.
What about competition? How is that shaping the industry?
Competition within the airline industry remains fierce, with airlines battling for market share and customer loyalty. This is driving innovation and pushing airlines to improve their offerings, but it also creates a challenging environment for maintaining profitability.
So it's a constant balancing act.
Yes, airlines need to find the right balance between offering competitive fares, providing a high-quality customer experience, and managing their costs effectively to achieve sustainable profitability.
What other factors are shaping the industry?
Technology is playing an increasingly important role in the airline industry, from the way passengers book flights and manage their itineraries, to the technologies used to operate aircraft and enhance in-flight entertainment.
So it's not just about planes anymore.
Not at all. Technology is transforming the passenger experience and the way airlines operate. We're seeing the rise of mobile apps, personalized services, and even the use of artificial intelligence to improve efficiency and customer service.
And what about sustainability? That's a big topic these days. How is that impacting the airline industry?
Sustainability is becoming a major focus for the airline industry as consumers become more aware of the environmental impact of air travel.
So it's not just a niche concern anymore.
It's becoming mainstream. Airlines are investing in more fuel-efficient aircraft, exploring alternative fuels, and implementing initiatives to reduce waste and emissions. They're also partnering with organizations to offset their carbon footprint and promote sustainable travel practices.
So the airline industry is at a crossroads, facing both challenges and opportunities.
It's a dynamic and evolving industry, and the airlines that are able to adapt, innovate, and prioritize customer experience and sustainability will be the ones that thrive in the years to come.
That's a great point. Now let's bring this back to United. How are they positioned to navigate these industry trends and challenges?
United is making strategic moves to address these challenges and capitalize on the opportunities. Their United Next plan, which we discussed earlier, is a comprehensive strategy that includes investments in fleet modernization, network expansion, customer experience enhancements, and operational efficiency.
So they're taking a holistic approach.
Exactly. They're not just focusing on one aspect of the business, but rather taking a comprehensive approach to strengthen their position in the market.
That seems like a smart strategy.
It's about creating a sustainable business model that can adapt to the changing dynamics of the industry and deliver value to customers and shareholders.
Now, I want to talk about something that often gets overlooked in these earnings discussions, the human element. We've talked about United's financial performance, their strategic initiatives, and the competitive landscape. But what about the people who make all of this possible?
That's a great point. The airline industry is ultimately a people-driven business. It's the pilots, flight attendants, mechanics, customer service representatives, and countless other employees who work tirelessly to ensure that passengers reach their destinations safely and comfortably.
So it's about more than just numbers on a spreadsheet.
Absolutely. The human element is crucial to the success of any airline. It's the dedication, skill, and passion of the employees that create the positive experiences that passengers remember and that build brand loyalty.
And what about the impact of the pandemic on airline employees?
The pandemic was an incredibly challenging time for airline employees. Many faced furloughs, pay cuts, and uncertainty about the future. However, they showed remarkable resilience and adaptability, and they played a crucial role in keeping the industry afloat during those difficult times.
They're the unsung heroes of the travel industry.
Without a doubt. As the industry recovers, it's important to recognize the contributions of these employees and to ensure that they're supported and valued.
That's a sentiment I think we can all agree on. Now let's circle back to United's earnings. We've covered a lot of ground, but I want to make sure we hit on all the key points for our listeners.
Certainly. To recap, United reported strong financial results for Q4 and full year 2024, exceeding analysts' expectations. They're benefiting from the travel rebound, their strategic initiatives are paying off, and they're in a strong financial position.
What are some of the key metrics that stood out to you?
Their revenue growth was impressive, driven by both increased capacity and higher passenger revenue. They're also managing their costs effectively, and their cash flow is strong. Their balance sheet is healthy, and their guidance for 2025 is optimistic.
So all signs point to continued success for United.
Based on the information we have, that seems to be the case. However, as we discussed, there are always risks and challenges to consider, particularly in a dynamic industry like airlines.
What are some of the things that investors and analysts should keep an eye on in the coming months?
It's important to monitor how United continues to execute its United Next strategy, particularly its fleet modernization and network expansion plans. The competitive landscape is another key area to watch, as well as the impact of external factors like fuel prices and the global economic outlook.
So while United is in a strong position, there's still work to be done.
It's a continuous process of adaptation and innovation to stay ahead of the curve and deliver value to customers and shareholders.
All right, let's wrap up this deep dive into United Airlines. We've covered a lot of ground already, from their record-breaking financial performance to their ambitious strategic initiatives. Now, I want to shift gears and explore some of the bigger questions and potential scenarios for United's future. Given their strong performance and ambitious plans, could they be on the verge of becoming the undisputed leader in the global airline industry? What would it take for them to achieve that?
That's a fascinating question. United is certainly positioning itself as a leader in the global airline industry. They're making smart investments, expanding their reach, and focusing on customer experience and sustainability. They're also navigating the challenges and opportunities of the industry effectively. But whether they can become the undisputed leader, that's a complex question with no easy answer.
Okay, let's break it down. What are some of the key factors that will determine whether United can achieve that level of dominance?
There are several factors at play. First and foremost, they need to continue executing their United Next strategy effectively. This means continuing to invest in fleet modernization, network expansion, and customer experience enhancements. It's a multifaceted strategy, and they need to keep all the balls in the air.
So consistency and follow-through are key. What else?
The competitive landscape is another crucial factor. The airline industry is intensely competitive, and United is facing off against some formidable rivals both domestically and internationally. They need to find ways to differentiate themselves and maintain a competitive edge, whether it's through their network, their customer service, their technology, or their brand image.
It's like an arms race in the sky. Everyone is trying to outdo each other.
Exactly. And then there are the external factors that are outside United's control, such as economic conditions, fuel prices, and geopolitical events. These factors can have a significant impact on the airline industry, and United will need to be nimble and adaptable to navigate them successfully.
So it's a combination of internal execution, competitive dynamics, and external factors that will ultimately determine their fate.
That's a good way to put it. It's a complex equation with a lot of moving parts.
Let's play devil's advocate for a moment. What are some of the potential risks or challenges that could derail United's ambitions?
One of the biggest risks for any airline is economic volatility. A global recession or significant slowdown in economic growth could dampen travel demand and impact airline profits. United is not immune to these economic cycles.
So they're at the mercy of the economy to some extent.
To a certain degree, yes. However, they do have strategies in place to mitigate the impact of economic downturns, such as adjusting capacity, reducing costs, and focusing on more profitable routes and markets. But it's still a risk that investors and analysts need to keep in mind.
What about competition? How big of a threat is that to United's dominance?
Competition is always a factor in the airline industry, and it's likely to intensify in the coming years. Low-cost carriers are expanding their reach, and new entrants are emerging in some markets. United will need to continue to differentiate itself through its network, its customer experience, and its operational efficiency to maintain its competitive edge.
So they can't rest on their laurels.
Not at all. The airline industry is constantly evolving, and United will need to stay agile and adaptable to thrive in the long run.
What about fuel prices? That's always a wild card for airlines.
Fuel prices are a significant cost factor for airlines, and their volatility can impact profitability. United has fuel hedging strategies in place to mitigate some of this risk, but it's still a factor that investors and analysts should monitor closely.
And what about geopolitical risks? We're living in uncertain times, and global events can have a significant impact on the airline industry.
Absolutely. Geopolitical events such as wars, terrorism, or pandemics can disrupt travel patterns, lead to border closures, and impact airline operations. United, like other global airlines, is exposed to these risks and must be prepared to respond to them effectively.
So it's a complex and challenging environment for airlines.
It certainly is. However, United has a proven track record of navigating these challenges and emerging stronger. Their strong financial position, their experienced management team, and their strategic focus give them a solid foundation for success in the years to come.
That's a great point. They've weathered storms before, they've come out on top. So while there are certainly risks and challenges ahead, they're also well equipped to handle them.
I agree. They're not a company that shies away from challenges. They seem to embrace them and use them as opportunities to innovate and improve.
All right, as we wrap up this deep dive into United Airlines, I want to leave our listeners with a final thought. We've analyzed their financials, dissected their strategy, and explored the industry landscape. But ultimately, United's future success will depend on their ability to connect with people, their customers, their employees, and the communities they serve. If they can continue to build strong relationships and deliver on their promises, the sky's the limit for United Airlines.
I think that's a perfect note to end on. It's not just about the numbers, it's about the people. And United seems to understand that.
And to our listeners, we encourage you to explore further. United's investor relations website is a treasure trove of information if you want to delve deeper into their financials, their strategy, and their vision for the future. Until next time, thanks for joining us on this deep dive.
It was a pleasure being here.